We all know affordable housing is a huge challenge. But what if the problem isn't a lack of money, but a lack of the right kind of money? Today, we're diving into a whole new financial toolkit that's ready to completely change how we build and buy homes. So, let's get into it. First, let's kick things off with a real head-scratcher. What you're looking at here is a massive disconnect. On one hand, housing is the third largest contributor to the entire economy. We're talking a whopping 12.8% of GDP. But on the other hand, the really big money, the trillions sitting in pension funds, they barely touch it. So you have to ask, why is this gigantic, super important sector being almost totally ignored by the biggest investors out there? That's the mystery we're going to solve.
To figure that out, we first need to get a handle on just how big this challenge really is. People call it the affordable housing gap.
And here's the absolute key. Building affordable homes isn't a quick project you can finish in a few months. It's a long-term commitment. It can take years to go from a patch of dirt to a place people can actually live. And that means it needs a very specific kind of financing, patient, long-term money that can afford to wait for a return. Your typical bank loan just isn't built for that. And things are only getting tougher. Construction costs are through the roof. The cost to borrow money is high. And for developers, there are just very few places to go for the kind of large-scale funding they need. Plus, they're competing with flashier investments, everything from tech stocks to crypto. It's a perfect storm. So this brings us right to the main obstacle, the traditional financial system itself. Let's break down exactly why the old playbook for funding just isn't cutting it for affordable housing.
It really all comes down to three big R's: risk, return, and regulation. First, the risk in development can be huge. Then you've got the potential for a much faster, bigger return somewhere else, which is always tempting for investors. And finally, the regulation involved is often a complicated bureaucratic nightmare. You put those three together, and for a traditional investor, it's just a sea of red flags.
So, if old money is failing us, where do we find new money? Well, the answer is in a pretty fundamental shift in thinking. We need to stop looking at the money markets and turn our attention to the capital markets. And this table just lays it out perfectly. The money market, that's all about short-term loans with high, unpredictable interest rates. Totally wrong for a 3-year construction project. The capital market, though, it's built for the long haul. It offers huge pools of patient money at fixed rates. This isn't just an alternative, it's the pillar we need to be building on. Right, so by tapping into those capital markets, we suddenly unlock a whole new set of incredible financial tools. This is what we're calling the Innovator's Toolkit, and it's basically designed from the ground up to solve the very problems we've been talking about. Okay, first up in the toolkit, REITs. That stands for Real Estate Investment Trusts. The easiest way to think about them is like a mutual fund, but for property. So instead of having to buy a whole apartment building yourself, you can just buy shares in a company that owns and manages a big portfolio of them. And REITs are fantastic because they solve some of those big problems we saw earlier. They give you liquidity, which means you can sell your shares whenever you want. They help you diversify your investments. And most importantly, they lower the barrier to entry so you don't have to be a millionaire to invest in large-scale real estate. Next up, we've got crowdfunding. This is all about the power of the crowd. Instead of needing one giant investor to write a massive check, you get thousands of everyday investors online, all chipping in small amounts to fund a project. It's like a democratic revolution for real estate development. Then there's something called Sukuk. This is a really clever tool from the world of non-interest finance. Instead of lending money and charging interest, investors actually buy a certificate that gives them part ownership in a physical asset, like a building. They then earn a share of the actual profits that asset generates. It's a completely different model based on partnership, not debt. We also have green finance. Now, this taps into the huge global trend of ESG investing. That's environmental, social, and governance. This is all about structuring financial deals to fund projects that are not just profitable, but also good for the planet, like building super energy efficient homes. And now for the one that sounds like it's straight out of science fiction. Tokenization. You ready for this? It's the process of taking a real-world asset, like an office building, and converting its total value into digital tokens that live on a blockchain. It's literally like turning a building into thousands of digital shares that you can buy and sell instantly from your phone. And the implications here are just transformative. Tokenization completely shatters the barrier to entry. You could theoretically buy a piece of a skyscraper for just a few bucks. It makes an illiquid asset, a building, instantly liquid. It cuts down transaction costs. And maybe the biggest deal of all, it opens up real estate investment to a truly global pool of money.
Okay, so we've got these incredible new ways to fund the buildings, but that's only half the story, right? What about the people who actually want to own a home? Well, the innovation doesn't stop with the financiers. It's also about empowering the home buyers.
One of my favorite models is rent to own. It's such a clear, simple pathway to ownership. Here's how it works. First, you sign a rental agreement that includes an option to buy the place later on. Then, a slice of your rent each month gets set aside to build up your down payment. And finally, you buy the property at a price that was locked in right at the very beginning. It's the perfect bridge from renting to owning. And that's not the only option. There are other creative models popping up too. Things like fractional ownership, where you just buy a piece of a property to make it more affordable, or co-ownership, where you can team up with friends or family to buy a place together. The whole point is to create new, flexible paths to get on the property ladder. So finally, let's talk about the engine that's going to power all of this innovation into the future. It really comes down to two things: technology and data.
Okay, just look at this number for a second. It's staggering. Right now, mortgages contribute less than 0.6% to our GDP. In developed economies, that number is over 50%. This isn't just a gap. It is a colossal opportunity for growth, and technology is the absolute key to unlocking it. See, technology is what makes all these new financial tools really smart. We're talking about advanced financial modeling that gives us incredible insights from data. We can use AI and machine learning to predict market trends, figure out the best place to invest money, and get a much clearer picture of any potential risks. It's all about replacing guesswork with actual intelligence. And that really brings us to the main takeaway, which is summed up perfectly in this quote. A real, lasting solution has to work for everybody. It has to provide that patient, long-term money for developers to actually build the houses. That's the supply side. And it has to create new, affordable ways for people to buy them. That's the demand side. You have to solve for both. And so that leaves us with one final big question. We've seen that the problem isn't really a lack of money, and it's not a lack of good ideas. The financial toolkit is here. The capital is out there, waiting in the markets. The technology to connect it all exists right now. The only question left is, are we going to choose to use them?